Today, I'm going to show you a secret that the wealthy use to buy and hold real estate. So if you are a buy and hold real estate investor, there is a vehicle that you can use that's available to everyone, just no one really knows about it. And we are going to dive into an example, and I'm going to show you exactly why that you should really be looking at this. So let's go over to the spreadsheet. And what we're going to do now is in this vehicle, let's say what I'm going to do is I'm going to compare these apples to apples, side by side. This is the infinite banking concept. Okay, so we're going to say year one, this is for a 40-year-old. So first year, 40 years old, he puts out or she puts out $30,000 of savings or something to start an investment to grow for a rainy day, whatever it is. The next 9 years, we throw $20,000 into a vehicle. And now what we're going to do is we're going to go with the cash value of the infinite banking concept side by side with the equivalent savings. So if you were, what I get a lot is, why wouldn't you just put this into the savings account? It's the same thing, right? Well, here's exactly why the savings doesn't work as well as the infinite banking concept. So after 10 years, all in all, we put in $210,000 and that's it. We're never going to put another cent into this if you don't want to. All right. And all we're going to do is let this grow and compound. And if you do nothing more and you don't even buy any real estate, you don't look at any real estate, you don't look at any other investments, and you just do this, this is where you will end up. Okay, so if we go to the chart after when that 60 years later, when the 40-year-old turns 100, look here, the infinite banking concept goes up to 2.6 million basically. The savings account, same capital outlay of $210,000. That's all we did. We put $210,000 into both these vehicles, and the savings account making nothing. Basically, you end up with $1,194 the bank paid you for your loyalty to them. So you die, you pass away, you give your to your estate $211,000 in your savings account. Here, your estate gets 2.6 million. So why would we do this for real estate investing? So let's look at it. Let's say in year 3 that we go in and we go ahead and buy a house. Okay, we're going to buy an income property. We're going to put $55,000 as a down payment onto a cash flowing property, and we're going to say that this generates $400 a month in positive cash flow. All right, so option A, which most people do, which I did when I first started, was I had my savings, and in this year it would have been $70,000 and change, and I would have taken the 55 out of it, and I would have been left, my savings would have went down to $18,800. All right, so that's one way of looking at it. Or you can take a loan against the cash value of your infinite banking concept. So your infinite banking concept is kind of like an asset. It's like your house. If your house goes up in value, think of it as, hey, I'm putting $30,000 into my house. I just put a new kitchen in. Then the next year I'm going to put a new bathrooms and then a new deck. And every year I'm putting money into an asset into your house. Your equity is going to grow and grow and grow inside your house. So you can almost, instead of selling your house, you can borrow against the equity of your house. So this is the same thing we're doing here is with the infinite banking concept is you have an asset and you're going to borrow against the equity of that asset. And this is all contractually, it's easy to do. I've been doing this, hint, since I was 40. All right, so let's say in year 3, we put $55,000 towards a down payment. And so what is that going to do? What this is going to do, year 1, year 2, remember we started with 30, we added another 20. Year 3, we added another 20, but then we took 55 of it back out. And from there, you just take off. All right. Now, what this chart does is we've got, let me scroll down here just a little bit so you can see we got savings is in orange and the infinite banking concept, the cash value, is in green. So somewhere around here, year looks like between 4 and 5, it's pretty much about the same. Okay, so if you're only going to do this for 4 or 5 years, okay, savings probably is the better way to go. This is something that you kind of have to be married to for a little while and go through the dating process because this is a long-term relationship here. Okay, but stay to the end and you will see how this really turns out in the long term. So as we go through this now, this is going to take us about 19 let's see, 20 or so years just to pay this infinite banking policy back. So at the end of that, when the policy is paid back, here's how much you could still borrow, another 443,000 versus your 231. And what I did was I took the cash value that we're going to make, right? I took the income, sorry, the $400 per month, and I put that back in. And what I did is I put that right back into the savings too. Okay, so the year 10, that's when we stopped contributing just our regular cash flow, and after that, from here on out, the reason that the savings is growing is because we're using the cash flow from the property and we're putting it all right back into savings. And up here, we're putting all right back to pay back our loan against the infinite banking concept. All right, so we're going to do this again in year 6. Exact same scenario, another $55,000 investment, which is also going to create another $4,800 per year of income. Okay, so let's go to this one. So again, we started going up, boom, we went down, we bought our first property. We kept going up, we bought our second property. Again, this comes up, they're pretty much the same until year 10. After that, the savings really slows down, but it's going up faster before because now we're putting two houses, the cash flow from 2 houses we were $400 a month per each. Now we're $800 per month. That's what's helping your savings go up. And we're also repaying that loan against the infinite banking concept. But look how much faster this is growing. This vehicle is compounding as if you never took any money out of it, because you didn't take money out, you borrowed against it. Okay, so if we go and let's go ahead, I like what we're doing here. So remember we did this in year 3, year 6. We're going to do it again in year 7, 9, and year 10. Okay, so we've got, in 10 years, we bought 5 rental properties, and we're going to just assume that they're all exactly the same. We took $55,000 out from either our savings or our infinite banking concept, and we use that as a down payment. And each one of those then generated $4,800 of income. All right. So by the time we get down to it, you've got, after 10 years, we're going to have an extra $24,000 of income that we've generated from these assets, the houses that we bought, the rental houses that we bought. And we're going to use that, and we're going to either plow it right back into the savings, or we're going to plow it right back into our infinite banking concept loans. Okay. So if we scoot over here a little bit, the 10-year chart is going to look like this. Okay, so in year 3, we bought our first one. It goes back up. Year 6, we bought one. Year 7, we bought one. We did not buy in year 8, but we bought in year 9 and 10. 10, you can see here, your savings is better. Okay, how much do we have here? We have $31,000 in savings, and cash value, we're down to $3,000. Right, we're all the way down to $3,000 of cash value. But look what happens. Okay, this is going to take about 25 years from the get-go to repay all of your down payments for the 5 properties. Your down payments will be repaid in about 25 years. Okay, so after 25 years, you've got $537,000 available of cash value. Savings, you've got $391,000 available. This is 25 years after we start. Let's say year 10, we stop. All we do is we stop and we soak this up. Look what happens as we go all the way out to 100 years old. Remember, we didn't do anything else of investing past year 10. We put no more money into the savings. We put no more money into the infinite banking concept. We didn't buy more houses. We didn't do anything else. All we did here was the savings number. We're saying that we didn't even use any of it in our own personal lives. All we did is we pushed that to push the savings values up. You can see this little where it curves a little bit. Year 25, that's when everything is repaid. So now your infinite banking concept has been fully repaid. The $24,000 a month, I'm sorry, $24,000 per year that we're still putting into the savings. I'm saying you take that and you augment your income. Okay, so if a 40-year-old in 25 years is going to be 65. Look at there. Now you can start going on a $24,000 trip, vacation, or buy a $24,000 car every year, or whatever you want. You get $2,000 a month of extra income that you can do whatever you want with. Or you're not doing that here because the way we've got this shown is it's all going right back into your savings. Here, we're stopping, we're using the $24,000 to have a better life, to do whatever we want to do. And look, we've still got cash value available to us growing so much faster than the savings account. Okay, so let's say we go until we're 100 years old. We're going to have 5 houses, remember, 5 rental properties. We're also going to have $2.6 million. And we've gone on vacation every year for, what do we say? This is at 25 to 64. So for about 15 years, we've gone on a $24,000 vacation, or you've had an extra $24,000 to spend and blow, do whatever you want with for that, like in your retirement years, in your twilight years. Here, we didn't spend any of it. We just, I guess here you're living off Social Security, not spending a dime, just Scrooge, holding on to everything and waiting to die so you can give your family 1.3 million, yeah, $1.25 million. Okay, here you had $24,000 a year worth of fun on top of your Social Security, whatever retirements you've got, and here at the end at 100, say you die when you're 100, your family's going to get $2.6 million, and it's tax free. Okay, what is it? It's here's where I usually lose everybody. That's why I waited till the end of the video. It is dividend paying cash value whole life insurance from a mutual company. Okay, most insurance agents say they know what this is, but they cannot build a policy correct. This is an insurance policy, but I just showed you, if used properly, if I this could be called an investment, just the infinite banking concept, but we use it throughout our lives. It's way better than the bank will ever give you. Each time you go to ask for a loan from your infinite banking concept, all you do is fill out a form and they send you the money. They don't ask why, they don't ask what it's for, they don't check your credit, nothing. Literally, I push some buttons on the computer and the next day I have money in my checking account and I can spend it wherever I want. Okay, now you can get in trouble. You could go buy, boats and RVs and blow this on anything. So you got to be, to me, it's a tool, just like a shovel. You can cultivate a beautiful garden or you can kill somebody with it. So pay attention. This is a great tool. It's not for everybody, but this is what is possible if you use it and do it right. And if you want, take a look at your own situation, we can totally do that. Hit me up and be glad to go through, how old are you? How much can you put away per year? Do you want to go for 10 years? Do you want to go longer? Can you go longer? So there's all kinds of different levers you can pull, and be happy to help you guys out. So, good luck, everybody.